everyone, my name is Sangyang Wanhan and my metric number is 201562. Let's move to the next question. Does the company enhance the shareholder wealth? My answer is probably yes. Return on equity is the strongest comprehensive financial analysis indicators. One of the goals financial management accounting is to maximize shareholder wealth. Return on net assets reflect the enterprise owner invested capital profitability. Enterprise financing, investment, assess operation efficiency of the financial and management activities, such as increasing return on net assets is the basic guarantee to maximize the owner's equity. Therefore, this financial analysis index is the enterprise owners, operators are very concerned about, as can be seen from the ROE data of the company in 2018 and 2019. It shows an upward trend, so the shareholder wealth is enhanced. Let's move to the fifth question. What are my comments and suggestions on the profit management? The comments is compare the profit margin in 2018 and 2019. Overall, revenue was declining during the period. Adverse phenomenon. Revenue growth trend was slower than its cost of goods sold, so interest rates are going down, which is a bad trend. We can see that the data of pre-tax profit rate and the income rate. The pre-tax profit rate is negative growth and lower than the income rate, which is not a good phenomenon. Gross profit is also negative growth. Negative growth rate faster than the growth of pre-tax profit. The figures for pre-tax profits and various earnings showed negative growth, indicating that the company's operating profitability needs to be improved. In 2020, as COVID-19 will make this phenomenon more serious, it is necessary to adjust various strategies timely to overcome this economic weakness. My suggestion is financial strategy is a subsystem of enterprise strategy. Its goal is to maximize the enterprise value through the allocation and use of capital. The choice of financial strategy must consider the business risk in different development stages of the enterprise and adjust timely with the change of the enterprise environment. For example, when the business risk is large, the ratio of debt to capital should be adjusted to maintain a relatively low debt ratio and reduce financial risks. Improve the internal control system of the group's financial management. Increase the enforcement efforts to eliminate capital and properly risk measures. Financial accounting systems, tax payment methods, accounting methods, and expense indicators suitable for the internal financial management of the group shall be formulated and revised in a timely manner during the implementation process. Improve the procurement approval process, payment process, production material collection process, sales outbound process, collection process, refund process, and other operational process. To provide support for the implementation of the internal control system, strengthen the management of documents, implementation of responsibility signature, layer upon layer to ensure the implementation. The use of funds and losses of all kinds of assets must go through sound examination and approval procedures, and the subsidiaries shall put forward suggestions for handling and report to the headquarters of the group for unified handling, so as to control the funds of financial risks from the source. Let's move to the part B, the second question. What are the ratios that needs to be improved? My answer is the first is current ratio. The current ratio measures the ability of a business current assets to be converted into cash to pay off its liabilities before short-term liabilities mature. Generally speaking, the higher the ratio, the stronger the liquidity of corporate assets, the stronger the short-term solvency. The reverse is weak. The change in the data from 2018 to 2019 shows that the liquidity ratio needs to be strengthened. The second is earning rate. The three sets of data of earning rate reflect the investor's expectation of the company's future earnings, and the three sets of data have been reduced, showing that the investors are not optimistic about the stock. That's all.